Hello, it's Scott with Zenvy AI, and welcome to the Systems Are Sexy podcast. Today, I am joined by Relli co founder Milo. Relli is building a marketplace designed to modernize how sponsors connect with accredited investors, also helping operators build scalable systems for investor outreach, lead generation, and capital raising. So, we'll talk about how many real estate sponsors struggle with sales and marketing infrastructure, how AI and data are changing investor acquisition, what separates sponsors that scale those from that stall out, and what's like building a startup in an industry that's traditionally been very relationship driven. I know it's a lot. So more welcome to the show. How we doing?
I'm doing good. Thanks for inviting me on, Scott.
Yeah. I wanted to talk about because of the last point that I mentioned there, kind of relationship driven and not really embracing technology in the real estate industry. And I know that's changing, and you guys are part of that. What made you think, hey man, this industry is still stuck in the past, and I really need to modernize it?
So we had a desire to passively invest in real estate because we essentially were great at the stock market, enjoyed that experience, but didn't have that type of experience investing in real estate. And we wanted to build it for ourselves. And we discovered that you could basically bet, and I'm using that word very strategically, on just about anything in the market today, like the color of the Gatorade when they pour it on the coaches at the Super Bowl, and what happens internationally with who we go to war with, and all sorts of fun stuff. But for some reason, we couldn't invest $100 in a piece of property that would generate cash flow, and we decided to try to figure out how to get that to work. And because of that desire to be able to diversify into passive investments for real estate, we went on this journey of meeting lots of real estate sponsors that raise capital from high net worth individuals and discovering that they really were missing a lot. There was a big gap in systems and technology associated with a lot of the components of their business, but very significantly associated with their investor relations strategy, how they actually would raise capital into their deals. And we realized that with our background in sales and marketing, we could build some really great systems for these sponsors that have a track record of success delivering for high net worth individuals, and slowly but surely push them towards delivering to average Joe like me so that anybody can invest as little as $100 into one of their deals.
Got it. I know as you start working with sponsors, I think they think their problem is, hey, I need more leads. But when we were chatting, it makes it sound like the real issue is what happens after the lead comes in. What are you seeing on your end?
I would definitely say that they need help finding leads. That's for sure. And I don't think that the expectations associated with what needs to be done with those leads has been properly set for most real estate sponsors. And what do I mean by that? Most of the real estate game, when it comes to these bigger deals, especially, were funded by high net worth and institutional investors. And when I bring the word institutional into this game, we're talking about large 7, 8, sometimes 9-figure checks that would end up in the pockets of these sponsors to build or acquire property. And when an institution is delivering a million, 10 million, $100 million to a deal, they have a lot of leverage to be able to make decisions on how they deploy that capital. So they're going to be significantly more engaged in the process. They're going to actively find deals. They're going to actively work the deals with the GPs. They're going to try to figure out a solution that would work well for the investment firm, and then they'll make a decision quickly based off of whether they like the deal or not. Those institutions are now distracted by very attractive debt offerings. And what's happened is sponsors that were normally raising capital from institutions are now not getting the same level of attention that they once were. So they're turning to the retail individual to deploy capital into their investment opportunities with the thought process that the same logical value that they deliver to the institutional investor will be the reason why a retail investor will give them money. There's an inherent flaw in that thought process. Individuals don't have leverage to be able to decide what type of return they expect from a sponsor, choose the structure of the return that the sponsor gives them in terms of equity and waterfalls and all that sort of fun stuff. They have to take whatever the sponsor is giving them and purchase it like a product. Here's my $100,000 for my X number of shares based off of the pro forma and offering memorandum that you've delivered me. In order for someone, individual like me or you, to feel confident enough to open up their wallet to the tune of $50, $100, $200,000 at a time to a complete stranger, they need some form of affinity with the person that they're delivering capital to. And that's the biggest differentiator between the institutional dollar and the retail dollar. And in order for a sponsor to effectively generate that relationship with someone, they need to be in front of them. They need to actually communicate with them. They need to have experiences with that person. That person also needs to see that this is a legitimate operation that is delivering results for other people like them. And it's doing so consistently without them before they are willing to then say, okay, I want to join your investor community and also participate in that benefit. And I think that's what's really missing. And we see it across the board. We work with companies that are startups that are raising money for the first time, all the way up to publicly traded companies that are annually audited by one of the big four that raise billions of dollars. Across the board, we see that about 95% of these sponsors don't have a CRM, don't have a system, don't have a sales cycle, don't have consistent messaging, don't have consistent branding, don't have systems to be able to replicate a salesperson within their organization such that they can bring in a complete stranger into their business and make them effective within a few months in raising capital. And then on top of that, there's no real organization for all of the outreach that's going out because usually those workflows aren't built and those CRMs aren't leveraged to be able to do that outreach, even if they have one in their business.
I think most people would be surprised by that. I know it's true because I've seen it, but it is pretty wild raising that kind of money and not having a system in place. I wanted to switch more to AI and technology. I know you guys are heavily data driven. How are you guys leveraging AI and automation inside your platform now?
So we have a lot of automations. We've constantly been looking for AI technologies to plug into the solutions. They are not as readily available as you would as one would hope, if I'm completely honest with you. So we're building internally. We leverage some of the AI tools to actually build our code, which, as you can imagine, has been a massive benefit to just about everybody that's shipping code. And where we see the most value that we can drive immediately is in those automations. So anytime that a lead comes through the funnel, we have a certain number of triggers that will happen depending on certain conditions associated with that lead, where they came from, what their sentiment is. And there are AIs that are actually taking those conditions and making decisions on them based off of replies, based off of, how much time they're spending on a particular page and where their mouse will flow, et cetera, et cetera. We're trying to leverage as much as we possibly can from every direction. And what we've noticed is that when we take control of some of that automation for some of our sponsors, they see faster and better results because there's a consistent improvement associated with our automations and with our AIs that we plug in. So we're across the board seeing it from a product development and shipment perspective, from a enhancement associated with our cadences and our workflows within the actual sales processes. We've built AI technologies into the platform that allow for chat and communication functions between investors and our database. And then when we deliver our leads, we do that through strategic programmatic buying of ads on different platforms. And we leverage all of our automations to then also deliver all of the data that we've generated back to those ad buying platforms such that we can improve the end result in the quality of the outcomes themselves.
Okay. Where do you think most real estate firms are behind when it comes to technology adoption? Is there certain areas you feel like, you mentioned CRM, but are there certain areas where maybe they're just not as quick to adopt new technology?
What I've seen is that the tech adoption that we've seen in the last, call it 2 or 3 years, because I think it's sped up quite a bit since we've been in the market, is mostly focused on operations. There's a lot of operational technologies that are coming into play that are enhancing the way that we manage property, the way that we ensure income into those assets, from management of the tenants and all of the different supplies and utilities that are being used on the properties. We don't see as much from a call it a marketing and sales and internal systems perspective, which is quite interesting. And I think the reason why is that these real estate sponsors are fighting over quarter points, and whatever we can do to create efficiency within the actual operation of the business that produces more return on investment is actively being pushed by very thin margins, because you have very highly capitalized deals that run on thin margins that basically service debt that's very structured. which is the unique thing about the real estate industry. You can lever a small amount of money for a very large amount of money that can produce a significant return based off of product that the bank recognizes is valuable in itself, which is why you get that debt. And the internal systems are usually the red-headed stepchild that nobody wants to look at, because up until now it's worked. Right? Jenny has figured out how to get our insurances dialed in and make sure that all the stuff is handled. Johnny is really good at picking up the phone, and he has his relationships. He has his 100 investors, and every deal that we have, we go to those 100 investors and 10 of them will bite. It works. So we're not going to fix it. Where you start seeing problems is when people want to scale beyond Johnny and Jenny, because those people are built into that business by the way of the founder building a business around themselves, right? They brought in Jenny so that Jenny could manage the back of house and make sure that the business runs while the CEO runs out in the front and finds opportunity. Brought in Johnny so that anytime that a new investor comes to the table, Johnny can handle that investor. Meanwhile, the CEO is still out in the front pushing forward. The CEO is involved in all of those communications. They're usually the end closer. They do all the heavy lifting when it comes to actually getting things over the line. The second that they want to then replicate themselves and say, oh my God, I'm tired. How do I keep doing this? Okay, I need to bring in another Johnny so that Johnny can then take my position and actually close the business. But there's no systems to replace Johnny. There's no systems to replace the CEO in closing business. So until they feel that pain of, hey, we're hitting a glass ceiling, we can't do bigger deals, we don't have more investors, it's really hard for us to find new people, it's hard for us to turn strangers into relationships, they don't focus their energy on it. They focus on the operations that will drive more returns for the money they already have deployed. So I think that inherently anything that has to do with like internal systems is usually put on the back burner in lieu of focusing on revenue optimization with the actual assets that they invest in.
Got it. Yeah, that's a good explanation. As far as like revenue optimization, I you mentioned about marketing. What are you guys seeing on your end as far as which marketing channels are working right now for attracting accredited investors?
So we're rather unique from the perspective that we've kind of gamed the system with our data. So we are heavily focused on Meta and LinkedIn, mostly on Meta from a paid perspective, mostly on LinkedIn from an organic perspective. We're building on both of those concurrently. So we're also bolstering paid on LinkedIn, and we're also bolstering organic on Meta. And because of the way that we've built this flywheel for data, where we collect data through our platform, we collect data through our advertising, then we coagulate that data and send it back to the ad platforms to tell them, hey, we want more of these type people, we have outcomes that are pretty incredible. So for example, our newest customer, $5 billion firm that just got on our platform about a month ago, they're generating leads at about $60 a lead, and we've had 100% of those leads come through as accredited. Now, of course, people can lie to us. People can tell us something different. But from the barriers that we've put in place to make sure that we get information from an investor before they give us their contact information, such that we can qualify them, our quality is very high there, and we're getting it from Meta. Now, the reason why that works for us is because Meta has the most data tools available to us to be able to send those signals. And from what we've heard out in the market from maybe more novice advertisers that are buying their own ads internally as opposed to going to a professional and leveraging data tools, the quality is not what they wanted when they outset to do the advertising, and it is reduced over the last 2 to 3 years because of the number of advertisers, and also all the fun AI stuff that's happening with Andromeda and all that sort of fun stuff. And where we see most of our sponsors going is doubling down on LinkedIn and organic. Now, personally, I think our platform is probably the best place to be able to generate those accredited investors because it's our number one focus. We're very good at one thing. So we have the ability to drive those people through the funnel. However, that's not to say that advertising on Meta is not incredibly effective. Advertising on Google is not incredibly effective, or doing organic stuff on LinkedIn, or partnering with podcasters like yourself or someone that has a unique audience is not effective as well. What I would tell someone who wants to advertise is that it all works. Everything works. I have yet to come across a strategy that has not worked for somebody. The question is, who are you and what strategy is going to work best for you, right? So some people have a great, powerful personal network on LinkedIn, and We have one sponsor, an example in the retail space, that he gets an immense amount of investment capital from LinkedIn. He's an ex-hockey player. He has thousands and thousands of followers. He's very young and very active. He speaks to an audience and it does really well. On the other hand, we have groups that all they do is advertisements. All they do is drive those ads because they have a really sophisticated CRM that they've built out that does consistent outreach, and then they drive the phones. And that's really effective for them. I think the most important thing is to build out the strategy in an intentional way and not underestimate the amount of work that goes into actually outreaching to these people and getting them on a call and building relationship with them and driving them through the funnel.
Yep. Yeah. I know you'd mentioned before when we spoke that they make one or two phone calls and they move on. Yeah.
I called them. I called them. What do you mean more? I called them. How many times you called them? Twice. How long did it take you for you to make the first call? 2.5 days. And now you're complaining to me that you're not getting leads. Guys, I had a great example. A great example. I was talking to another gentleman that owns a marketplace like mine. It's called GPLP Match. You've probably heard of it. Many people have heard of it. A guy named Alexi, wonderful human being. And we were both kind of griping about our GPs. As much as we love them, they live in their own world. And he asked me, he was like, "More, how do I get these guys to close? Like I get them amazing leads, like institutional leads, real people, real money, big money. And then they complain to me that things don't close." And I'm like, "Okay, well, how quickly do they respond?" "Dude, I sent a lead for this guy that wanted to invest 25 million in a deal and the guy didn't respond for 3 days." And you're like, well, if the guy doesn't respond in 3 days to an institutional investor that wants to deploy 25 million, do you blame him for not showing up to a meeting? No, I don't blame him. Not at all. Because if I'm going to give you 25 million and I show up in your inbox and you haven't responded to me in 3 days, there better be some sort of system to make sure that someone with a $25 million check, when they get an email in my inbox, gets a response immediately. And what people forget is it's like, okay, but my deal is great. That's cool. But they're not necessarily buying the deal. They're buying the operator. The deal is a secondary thing. If you as an operator do not show up and show that you are the most professional person that is worth giving 25 million to, guess what? There's a lot of other people that will happily take that 25 million. They'll respond immediately and they will be there for anything that investor needs.
Yeah, absolutely. Yeah, I wanted to ask you about, starting and scaling a business, because that's a big part of what we talk about on the show here. And I'm wondering, when you start out, you wearing a lot of hats. What part of the business do you feel like still depends upon you and your co-founder today that you would kind of like you would automate or take off of your plate?
So right now, I'd say the vast majority of our business, and mind you, we're in a very interesting spot. We're an early stage technology company. So we're a resource constraint, debt constraint, all the things constraint. We don't get access to a lot of the things that a company that has assets would be able to take advantage of. So for us, it's all about running as lean as possible and focusing on the things that drive the business, really drive the business. So right now, between me and my business partner, I'd say about 90% of the business administrative work and the actual production of the business is us two. Now, we have put 4 operators in specific spots to handle very specific things, and that's how we deviate work for ourselves, and slowly but surely we'll release those hats as we continue to grow. Thankfully for us, this is our bread and butter. Sales and marketing is our bread and butter. This is what we know. This is all we've done. This is what we're good at. So we've been able to build systems in a very effective way, and we leverage AI pretty well to be able to build product, especially when shipping code. We've essentially been able to replace what someone would consider a CTO with Claude Code, which is pretty amazing. But yeah, I think for me, and just to speak completely vulnerably, where I'm at in our business, or where we're at in our business more correctly, is we have now solidified our first commercially viable product. We have the ability to deliver accredited investor leads on demand. They're faster, better, and cheaper than just about anything else that you can find on the planet. We do one thing, we do it really, really, really well. Now, what that allows us to do is now systematize the way that we deliver that product. Because up until now, we've had to iterate and iterate and iterate and iterate and iterate to figure out what the right combination of deliverables would be for our customer to be happy and for them to understand the expectations of what they need from them, and to give them an option where we would augment all of the heavy lifting that they don't want to do. So we figured out how to do that, thankfully. Now I'm in a position where I have 2 gentlemen that are picking up the phone for us. Originally, they were picking up the phone to investors, to leads for investors. Now I've shifted them to picking up the phone to GPs to go find opportunities with new investment firms. And slowly but surely, we'll move them through the process of going from top of funnel, where they find the opportunity and get a meeting on the calendar, and then I take care of the rest, to top of funnel plus mid funnel. We'll then add the discovery call portion where they actually have to show the customer what it is that we offer. And then I'll come in for the close, to eventually giving them the entire sales process from start to finish, to schedule the meeting, do the discovery call, close the business, where I can then focus on underwriting deals and growing the business. Now, that's taken a long time for us to get there. We finally have the resources in place and a product that is strategically built enough for us to be able to give a college student that is completely green the ability to be successful in selling that product. So now, once I release that hat, I'm able to go and continue to build the business, bring on new partnerships, bring on new capital into the business, and get resources to remove my business partner from some of the active day-to-day work that he does with building the tech, building the product, managing the marketing, dealing with all the ads, et cetera, et cetera. And slowly but surely, the goal is to release as many of those hats as possible. Takes a boatload of time. It's been kind of painful, but we're here. So now is my turn to start delegating. And it's a wonderful place to be, but you can't really get there until you have a product that you've been able to put in front of customers and really stress test to know whether it can deliver the value. Because the last thing you want is people selling a product that isn't good. And then you just have to put out fires all day. So that's where we're at. We feel pretty confident that our product is about 98% there. And now I know that I can put any operator that I train in a position to win because the product will justify the sales process.
Yeah. Great. Thanks for sharing that. Maybe one or two more questions. I'm wondering what's one thing real estate sponsors should be doing today that they're probably ignoring? I know it's kind of a wide ranging question, but maybe something that you've seen.
I'm going to keep on harping on it. Build a CRM and use it. It's not hard. And a lot of them actually have a CRM. They just don't use it. I think the biggest hesitation that most sponsors have is they don't want to bother people. They don't want to look like they're that spammer online that sends a million emails and blah, 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 blah. But I think what's really important is to look at what your competition is doing. And if you look at some of the best competitors in the marketplace, you'll come to realize that when you send them a lead, they have an immense amount of content that they put in front of you. And that in itself is why they're eating your lunch. So the number one thing that I would tell every sponsor that is getting serious about raising capital, but in general, building their business, because real estate's a very capital intensive business and requires you to be able to actually have a significant flow of those investors. I would recommend that you spend the time to build the automations to be successful and you use them where you're putting a consistent amount of messaging in front of the people you actually want to do business with.
Absolutely. So if people want to learn more about Relli, where should they go to find out?
So come check out our platform for sure. We're at relli.co, relli.co. And you can create an account. You can be part of our community. You can check out our deals. You can also let us know if you're a sponsor and you want to raise capital. If you want to follow our content, we're on just about every social platform at Invest with Relli. Do daily content, videos, occasional stuff, overviews, all that sort of fun stuff. And if you want to connect with me personally, I am very active on LinkedIn. So LinkedIn is the best place to find me. You spell my first name, last name, you'll find me. It's Moore, M-O-R, last name Milo, M-I-L-O.
Awesome. Well, thank you, Moore. We appreciate the time today. Good chatting with you.
My pleasure, Scott.